Hello everyone and welcome to Markets Analyzers. Today Nifty rallied by 31 points and closed at 21,544 and Bank Nifty fell by 207 points and closed at 47,242. Today Nifty opened with gap up. Yesterday global markets closed on a positive note. In similar lines, our markets opened higher and after opening they moved even upside. The markets in afternoon were positive close to 1%. Then came the fall from 130. The markets almost wiped out the gains and closed with nominal 31 points gain. There is no particular reason for today's sudden fall. I think it is just a profit booking. The level where Nifty is now present is a very important zone. I have explained importance of that in previous market analysis video. I will try to play that clip. At least closing below 21,520 is important. This video was done on 2nd January. From then, the price has taken support from that level close to 4 times. So still I am expecting Nifty to take support from this zone of 21,570 to 21,520. If this support breaks, then the major support is 270 points away. It is present at 21,250. It is very hard to break 21,520 to 21,570 zone is what I think, as options rating are also very strong there. My view is still bullish on Nifty. If we talk about upcoming events, on January 11th, which is Thursday, US inflation data will be released around 6 pm in Indian time. The expectations are 3%. Any big deviation will impact global stock markets. If the data comes around 3% level, then there will be nothing to worry. The market participants are very strongly believing that rate cuts will happen earlier in 2024 than expected. Inflation is one of the main data points that will be taken into consideration by US Fed. If it gets cooled down more than expected, then the rate cut chances will increase even more. This event will have its impact on our markets on 12th January. And there are other big events on Thursday 11th, which are IT sector results. Both TCS and Infosys will post their results. They can influence IT sector and they will also, through their results, will pave the way for the rest of the IT stocks. So for now, look at these zones for Nifty. I think there is nothing left to speak. FIs are positive in futures and slightly negative in cash. Nothing alarming from them. US 10-year bond yields are slightly inching higher side in recent days. But as I said, US inflation data, if it comes around expectations, then automatically the bond yields will cool down. Crude oil is trading around $70 to $73 per barrel mark. Nothing to worry as of now. But stay alert on 11th and 12th January as IT stocks results and US inflation data can influence further markets direction. Now let's talk about stocks news updates. First, let's talk about Z Entertainments. Yesterday, Bloomberg in the news article reported that the Sony Group is planning to cancel the deal with Z Entertainment. The reason Bloomberg told is due to CEO Punit Goenka. Today, Z Entertainment has clarified this news, calling the report baseless and factually incorrect. After Z Entertainment's clarification, the stock price recovered some losses. It was at one point trading with more than 10% losses, and by the end of the day, the share price closed with 7.6% cuts. For the viewers who are not aware of the deal between Z Entertainment and Sony Group, I will explain all the events which took place until now. In December 2021, both the parties, Z and Sony Group, signed an agreement for the merger. It means to bring both these companies into a single company. If they combine, they will become the largest entertainment network in India. To merge two big companies together, they should get various regulatory approvals. They should get approval from Competition Commission of India, CCI. They got approval from stock exchanges, NSE and BSE. Shareholders have also approved the deal, and the lenders of the company have also approved the deal. NCLT has also approved the deal. The time period to complete the merger is 2 years from the date of agreement. The agreement was signed on 21st December 2021. The 2 years time period is 21st December 2023. However, you get an additional 1 month as grace period to complete the transaction. The deadline for them to complete the deal is before January 21st, 2024. They still have days left. The reason why the deal is not moving forward is due to disagreement between both Sony and Z regarding the CEO of merged entity. They all earlier agreed that Punit Goenka will be the CEO of merged entity. But in June 2023, SEBI, our market regulator, has barred Punit Goenka from holding the positions of a director or key managerial position in any listed company due to diversion of funds case. It is completely different topic. For now, let's stick to today's update. It means SEBI has banned Punit Goenka to not hold any positions in listed companies. Now, due to this order, he cannot become CEO of this newly merged entity. Then later, he challenged SEBI's order in SIT and he got relief. But Sony Group is not comfortable with Puneet Goenka leading the merged entity due to their corporate governance policy in Japan. Now, Sony Group is wanting to make its present Sony Pictures Network head NP Singh as the CEO of merged entity. This is the brief history of this matter. The two parties are yet to come to an agreement over the next CEO of the merged entity, and it needs to happen within the deadline 21st January. Next, let's talk about semi-annual review of FTSE Global Equity Index Series. These are different stock market indices provided by FTSE Group based on London. Investors all over the world will invest in those indices. It is similar to our indices like Nifty, Bank Nifty, Sensex. We will try to invest in those indices through mutual funds or directly through ETFs. In same way, big global investors will invest in those indices created by FTSE Group. In FTSE All World and FTSE All Cap, these are the indices names. In these two indices, semi-annual review will take place on February 16. It means once every 6 months, they will review stocks present in those indices. If any of the stock does not match their criteria, they will remove that stock and they will add a new stock which suits their criteria. For example, Nifty 50, India's top 50 companies will be present in Nifty 50. Once every 6 months, they will also review the stocks. The largest 50 stocks by market cap will be added to Nifty. If any new stock is added to FTSE Global Group indices, the funds inflow will be seen in those indices from the investors who invest in those index. Now, according to IIFL research, Phoenix Mills, Thermax, and Suzlon Energy are most likely to be added to those indices. It can bring an additional inflows worth $46.2 million into Phoenix Mills. Thermax could see $26.5 million, whereas Suzlon Energy is likely to get $89.4 million inflows. This is a reason for positivity in those stocks today. Before moving on to the next news update, if you like the content I have shared with you till now, do consider to subscribe our channel Markets Analysis, like the video and share the video with your friends to help us grow the channel. Next, let's talk about Larsen & Toubro, L&T. They have won an order to build the new All-Indian Institute of Medical Sciences, AIIMS, in Rewari, Haryana. The company did not disclose the value of the order, but named it as a significant order, which may come under 1,000 to 2,500 crores. Today, the share price of L&T touched a fresh 52-week high and closed with 1.6% gains. Next, let's talk about Tata Motors. They have reported 27% uptick in Jaguar and Land Rover JLR wholesale segment for the December ended quarter. Their volume stood at 1,143 units, which is last 11 quarters best. Tata Motors has three major segments, which is passenger vehicles, commercial vehicles, and JLR. JLR segment alone contributes 60 to 70% of Tata Motors revenue. Now, growth in JLR sales is a positive news. After these updates, multiple brokerage firms have increased the share price target of Tata Motors. Morgan Stanley increased their next 12 months target to 890 rupees per share. Next, let's talk about Bharat Forge. They have signed an MOU, Memorandum of Understanding, with Government of Tamil Nadu to invest 1,000 crores to expand manufacturing in the state. Not only Bharat Forge, various companies including Adani Group, Jindal, Hyundai signed MOUs with Government of Tamil Nadu. These are some of the top MOUs signed. And Chief Minister of Tamil Nadu has said that investment proposals worth 6.6 lakh crore rupees were attracted at the end of the 2-day summit, which was held on January 7 and 8. And he also updated the blueprint for making the state of Tamil Nadu a $1 trillion economy by 2030. So friends, this is today's news video. If you found the content informative, subscribe to our channel Markets Analyzers and press the bell icon. Like the video and share the video with your friends as well. I will come back again with another interesting video. Until then, take care.